Hi, I'm Clayton Fowler.
Hi.
Hello.
Hello. Hello.
Do you have debt or bills or loans that you'd like to pay down or pay off? If I can show you a way to do that and to possibly pay them off or pay them down, would you let me? I'm going to show you in chronological order how to invest in the stock market by getting a broker, developing a trading strategy, and executing trades. According to Today Trader, the first thing that you want to do is open up a brokerage account. When opening up an account, one of the things you want to look for is you want to look for the fees that brokers charge. They charge different fees and they range in different amounts. These fees are for opening up an account, when you go to put in a trade, and when you execute a trade. These fees can add up, especially if you have a small account or you're starting small. The other thing you want to do is you want to find a broker with a really good education platform. There's a lot out there that don't supply a lot of good education, and you don't get the basics and the foundation. I think personally one of the number one things is education. You want to learn as much as you can before you start making these trades and using your real money. And this will be detrimental into your success in investing. The second thing we want to do is we want to decide what trading strategy you want to use. Online Trading Academy says that the most important objective should be to preserve your capital. Number one, you want to minimize your losses. And with finding a trading strategy, there are a couple different ones. One is long-term. You want to do long-term trading. It's less risky and less volatile. A lot of the times long-term will run anywhere from a month or so to a couple years or more. These are companies like IBM, Netflix, big corporations that they don't fluctuate that much. So they go up slowly, but you don't have to worry as much. The other is short-term trading. That is more risky and it's more volatile. These are in small cap stocks, small cap companies, smaller ones we call penny stocks. They fluctuate daily. They could go up 50%, 100%, and these are things that are more risky, but they also pay higher in the short term. So depending on your strategies, you want to find out your risk management on what you want to risk and how risky you want it. Third, you want to execute your trades from start to finish. So the first thing you want to do is place it in order. You can decide if you want to go long on a stock, which means you're going to buy a stock in hopes that it is going to increase in value and go up. Now, if it increases in value, you sell at a certain spot that you have already predetermined to gain a certain amount of profit. You could do a short position. Shorting is betting against the stock, basically. You're trading against it, which means you're going to get it at a certain price and you are betting it's going to go downwards in price. So you're going to basically, it's buying and selling a stock when it goes down. And you make money when it goes down. But you got to be on the right side of that trade. Either way, if you're going to go long or if you're going to go short, to make the money. The last thing you want to do is you want to close out your position. So you've got your stocks that you want. You've got the type of trading strategy. Now you want to close it out. So what you want to do is you want to sell that stock for a possible profit. That's what we're all getting into it for. You don't want to lose. So with that, you want to get your stock, either if you're going short or long, You want to sell it either way to make the profit. Insider Business Daily says that to grow your portfolio substantially, take most gains in the 20 to 25% range. Don't get greedy. Grab your profits. Pay yourself. In conclusion, I've explained to you the process of investing in stocks by opening up a brokerage account, determining your style of trading, and executing the trade. Not everyone's going to make a profit, but with the proper education and discipline, you have a greater percent of making a profit and being successful investing in the stock market. No matter how big or small your account is, we all can benefit from a little bit of extra cash.